everybody. This is Mickey Mao with CartoonMoneyPrinters.com. Today is Friday, February 28th, 2025. It is the last day of February, and a lot of our calls, a lot of our predictions were coming true today. So today I'm joined with Astronaut Toad. So why don't you go ahead and say hey, my dude?
Hey everybody, how is it going? February candle just closed and it was spot on.
Yeah, you and I both have been measuring the macro, and my chart hit perfectly. And I'm curious to see what you think about February close. It just closed a few minutes ago.
Yeah. So let's get right into it, huh? I want to do 20, 30 minutes of Bitcoin analysis for the general public to watch and see. And you can roll back the tapes and if you have our February 1st live stream, you can see that we called this exact move, this level. And then after 20, 30 minutes of Bitcoin, I want to do private members only technical analysis for any coins we want and just see what we think, because this is a scary candle close. This February candle is just crashing down. So we really want to know what comes next. And we've got a full analysis to do, and it's basically been spot on for the past few weeks. But yeah, let's get into it. I have all my folders here of the monthly candles and the 2025 forecast. Here's the monthly chart. Let's see what we got here. We had a retrace to monthly equilibrium. Look at that. It zapped that middle range right at 79,000-ish. And then it bounced back up, just like we had said. I'm going to close the month here, and then I'm going to open my 2025 forecast, because here's the fair value gap on the monthly chart. And so that's the 50% of the fair value gap right there. That's 50% of the fair value gap right there. And then here is the 50% retrace of the move. And this green line is our forecast that we started on February 1st. And I said it's going to bounce up a little bit, and then it's going to drop down to one of these levels, either the 0.5 or the fair value gap, and then it's going to bounce. Well, it tapped both levels, and then it bounced back above. So that's it. That's exactly what we're seeing. And the question is now, I'm going to leave this forecast and see what comes next. I think we're going to see some sort of retrace up. The reason I have it bouncing off this level is because that's where the fair value gap high is. And then I think we might spend 1, 2, 3, maybe 4 or 5 or 6 months just chopping around in this level before we get going again. So maybe March will go up or down. We might get a doji in this fair value gap. It might wick this high and wick this low. It might get all the way to the golden pocket this month. And if it does crash this hard, this fast, that kind of lends me to believe that the scarier the market gets, the more that you know that people are bailing out and handing over their money.
Yeah.
And that's not good.
Well, my analysis is a little interesting here. I think it's a healthy market structure.
Yeah.
So what this to me is showing is that Bitcoin is trading healthily. It's moving along in a structured way. Even if the lettuce fingers or the paper hands decide to sell, there's going to be enough demand for Bitcoin in and of itself that we're going to see another pump. Especially with Michael Saylor buying the top.
Yeah.
Yeah,
Michael
also,
Saylor always buys the top.
yeah, and it works. He still comes out ahead. I do want to point out, as well as news, we had the FTX unlocks from the money that was supposed to be returned. So those people are probably exiting positions and getting their
Yeah.
money back, if not in profit.
Yeah.
As well as there was some Silk Road from the government, some coinage there that was
Wow.
getting unlocked this past month. So I could see like these being certain factors and catalysts behind this retracement.
Yeah. So here's that bearish. The reason that this bearish divergence is drawn up here is because of our money minter D indicator, and it is a bear div right here that you can see. It's hard to see without maximizing it, but from this, where the dot is the cross of the momentum waves, and from there to there, that's a lower high, this second one, and then we've got a much higher high. So that's a massive bearish divergence, which, when a divergence hits, you have about 10 to 15 candles of validity before you throw away that divergence. So
Yeah.
from this divergence, from this high here, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles gets us to November of this year, when technically it could just grind and chop down before it moons again. So you have to be prepared for something that boring and terrifying, boring or terrifying, or both, before this divergence can be determined to be over and done with. It might be over and done with in 2, maybe 3 candles. We might get a doji here, another drop here, and then it moons after that. But this divergence is pretty strong, so you don't expect it to go flying to the moon after one pullback candle. This candle is not expected to be an engulfing retracement up. A bearish engulfing candle is not in the forecast.
I would also make a note here that
a bullish engulfing.
the money flow in this doesn't come into play on the monthly chart because it's such a lagging indicator on the money minter that it's 60 bars before it even starts on the monthly chart. So that's 60 bars of data before it's able to place on the board is how the money minter is coded. So 60
but I will
bars on the
say
month.
that
That's
if you
60
look at
months. That's like 5 years of data before that money mint before the money flow starts placing.
Yeah, I will say you do have a bearish divergence on the money flow here. It's a very lagging, slow indicator. But you know what we can do is I can kill this.
I think the weekly would probably be a little bit more accurate.
We can pull up a regular money flow indicator, and then we can set it to a shorter length, like 14. Okay. Then we can do this, and we can see same thing. Even if we give money flow a very quick, responsive 14 period setup, it still gives. I mean, this is kind of better, but yeah, still. If these being equal highs and this being a much higher high from 70,000 to 101 to 102,000, that's still a bearish divergence. It's not an A+ bear div, but it is a divergence, a bearish divergence. So yeah. All right, let's move on. Weekly forecast. Look at this past week. Remember, we said it over the past 2 weeks. There's dojis everywhere. Look at that. Crazy, crazy. And that's what we were looking for, is This was a weak bull div, but it was just not really that strong. Forget if it was momentum or what was it? Is it Money Minter? No, it must have been par. But the par is not that good for weekly or monthly charts. The par is really a faster time frame indicator.
Yeah.
So we had this drop. It slashed through these fair value gaps. It gave us this retrace. It tapped some moving averages. Let's see. Let's look at the naked chart here. Yeah, tapped my moving averages. Oh, look at that. Right on the money.
Is that a VWAP?
On that moving average. No, this is a custom. It's called the Kaufman Adaptive Moving Average.
Okay.
And I have some very specific settings dialed in. You can get it in the indicator in the private Discord, everybody, if you're watching. But this is a very awesome moving average that is a trailing stop loss. So for example, if you happen to get into your trades down here at one of these orange blobs, you could trail this up and have no stop and not get stopped out until you get a candle close below this level, this moving average. That's kind of why I use the KMA, the
Look
comma.
at those squeezes, those sexy squeezes before those pumps. You get like two or three of them. Like...
You get that. Whenever you get that tightening squeeze, this one's not even that good. This is like a widening squeeze, but it's still paid.
Yeah.
But yeah, I mean, a squeeze on a weekly chart, like you pay attention. And I remember when this squeeze started back here, I was excited. I was like, you pack your bags at this orange level down here. If anytime you get a wick into one of those, you pack your bags. And you get ready to hold it for a month or a year or whatever, but you pack your bags in the orange,
Not
orange lows.
Advice, but we do encourage vacations.
Exactly. That's not financial advice. Pack your bags for a vacation. So yeah, this is my favorite indicator. I made it myself. I had some friends help me code it, but the idea, the concept is mine. And me and Mickey developed the idea of how to trade entry and exit with this, and it is just, it's working beautifully. And I like to check out the Heiken-Ashi candles, but I don't actually trade with them because they don't give correct open close high-low data. They only give correct data in some forms. But anyways, this weekly candle, this weekly candle still has 1 day, 22 hours left, but we have to worry about this because I'm going to close that. And let me hide this so I can draw market structure. We have to worry about this close because this is technically this would be a bearish break of market structure. We've got this high here. And then that's that. There's your weekly high. That's the all-time high. So I got to do this. But here's what the weekly chart is looking like. You've got this that created an SFP, okay? When you get an SFP, a swing failure pattern of a high, you expect price to return to the low. It did. This, if this touches this high and then if it closes below this low, this is a full bearish market structure shift. We have 2 days for this to get back up here and turn into a nice a close above. If it we're gonna drag this out so that we can see where this gets to by the time this next weekly candle opens. Okay, then it is technically kind of bearish, but a wick below this level and then a close above gives you some hope to return to this high. I don't fully trade market structure, but that's how market structure does work. Let's see, we got our weekly range here. That's internal. So this is our internal market structure. And then here is nope, that's our golden pocket. Where is my weekly market structure? Can't find it. Oh well. Draw it again. And no, it's not from this low. It is from this low because that's where the 2 candle pullback is. Range weekly. So we touched equilibrium. This external structure is bullish if it touches this and it bounces. However, this structure now having tapped this high and closing below, it is bearish. And if this closes below this level, then we should expect lower. You should expect it to get to discount. You should expect it to check out. You got a little bit of, you got some order blocks and fair value gaps around here. There's this tiny little fair value gap down here at the 786 Fibonacci. Everybody's gonna be crying if you get this all the way down here. That's not gonna be good. But that's right on the Fibonacci 786. So set your stink bids. Again, a stink bid knife catch is a lottery ticket, so it's not financial advice. But you should have a limit order just waiting down here at 65,000.
I still
on spot, not leverage.
Yeah, I still am of the thesis that we're gonna retest the previous all-time high, which was at 777.
Oh, you mean this all-time high?
Correct.
Yeah. Okay, let's draw that out. That's a monthly high. And then I'm gonna draw it as old ATH.
Yeah, I think that's gonna.
So this is my thesis as well. We've got another massive fair value gap here on this weekly chart. Whenever you see multiple gigantic fair value gaps, you go up a time frame. So the weekly, we should jump to the monthly to correctly map this fair value gap. But this is right at this wick and right at the old all-time high. So there's got to be tons of liquidity of people who bought around this level, and they are going to be dumb and round trip their trade. And maybe they're taking some profits up here, but you know how it works. You get into a trade right around here as it's breaking out. You close half of your position up here and you're partying. Then you round trip the whole thing and get stopped out for your other half of your position down here. And you're handing your money over to a long-term holder that is waiting for Bitcoin to go to 200K. Okay, that's how that works. So there's gonna be a ton of stop losses right here, just begging to get hit. So that is my forecast for the next 1, 2, 3 weeks. Is we see some chop, maybe a bounce into because this is gonna be a fair value gap sooner or later. Maybe we retrace up to this low, and we see it get to, what is this price level? 89028. We might see it get there, and then it could drop to this old ATH 73835. Okay, let's glance at the daily chart really quick. That, man, remember those dojis? Just ridiculous. Absolutely. Yeah. Oh, I gotta update that because that's obviously outdated. Find a long. What a terrible idea. So this was what we were talking about with just this chop of like, it's wicking the highs, it's wicking the lows, and you're creating all of this liquidity in both directions. That's why when this moved down, it was such a brutal, scary move. It just slammed down through all of this liquidity because you've got all of these key levels just begging to get tapped. And when you stack up all of these levels, all of these old lows, their stop losses beneath them. There's a stop loss beneath all of these levels. And when you hit a stop loss, you are forcing someone else to, they don't want to get out of their position, but you are forcing them out of their position. That's when things snowball. And that's when you get really bad drops. Or if you're forcing shorts to buy, that's when you get crazy moon pumps. Which is why we saw this break all these dojis, and it just went flying down and crashed. That's why we saw it look so bloody. Anyways, that's it. So let's look at, here's what I want to look at. Weekly equilibrium. Let's mark this out. Right here, if this is the, we should be looking for a buy. Do I have a buy zone? This is the daily. Oh no, weekly, look for longs. Yeah, there it is. Weekly equilibrium. So from the weekly chart, here's what we do. We go down to the 4-hour chart and we see, okay, this did not give us a bullish market structure shift in this level yet. So technically, there is no trade on this. It is still bearish market structure. However, this fair value gap got completely inverted. So because it tapped into this range where it's weekly equilibrium, and then it immediately inverted this 4-hour fair value gap, we can look to this fair value gap for support, which for me would be, I'm going to highlight this area and say, in the top half of this fair value gap, we can look for longs, okay? Make that green. Okay. But then let's go also down to the 15-minute chart just for fun and look in this level to see if there was a trade. Market structure got down here, and then this wicked those lows. So there's 15 SFP, and then this wicked those lows, and then that makes this the high right here, and it's got above, it broke above there. So there's your 15-minute. And then when it broke above there, it retraced here. It respected this fair value gap quite nicely. So that's some bullish confirmation. It grinded back down. It grinded down through all of these. It just took people's money, long and short, just grinding down. And then it shot up through all of the short stop losses. And then it found support in those short stop losses. So basically, there was just tons of buying pressure here because all the shorts got stopped out. And then when price retraces down, even more shorts are exiting and people are buying to go long. So at this point right here, that's when you say, okay, I really like this for a long. I am going to go fibby right there. There's your trade on the golden pocket. And do we get an entry? No. Let's see. It front runs the golden pocket. You would get an entry if you had just gone at equilibrium and then put your stop loss below that, between the 786, the 618 and the stop loss. And you could shoot for one of these highs here. That's a great risk reward right there.
Send it, Froggy.
Nice
I saw you
2.5.
typing.
And that's it. And then it just rips up all the way up through. So if you hold a runner, this market structure is just going and going and going. And here we are now. You could still be in this long. Well, you might get stopped out here.
Yeah, Froggy
from this.
took this trade in, this morning.
Yeah. Good man. Beautiful trade.
Yeah.
And now there's not much to do because we're way out of weekly equilibrium. Let's check money minters green. We got a bearish divergence there. These momentum waves are tiny. It's the weekend. We could scalp a smaller time frame chart, but
I say we move on to
yeah.
others. Astro, your bandwidth is cutting out. Astro, your mic cut out. Can you guys hear him?
Oh, I'm
Hey,
not a big fan.
you're cutting in and out.
Me?
Yeah, it was like we
Okay.
lost some bandwidth there.
All right. Well,
It was your audio, but like the screen was fine.
okay.
I'm not sure if it was my
Yeah.
end.
This V is a strong altcoin season setup. Like comparing this against Bitcoin. Bitcoin's crashing and Bitcoin dominance is flying. I mean, altcoin dominance is flying. That is very telling.
Yeah, I think we're on the precipice of an alt season.
Yeah, Bitcoin dominance tried to do a little blip here because this right here is where alts are getting trashed worse than Bitcoin. Okay. See.
I want you to check out others on the weekly and then draw a trend line. Yeah, alts have been getting pummeled, Froggy. They've been getting smashed for the past couple like months, except for like Link and stuff. But Link totally had a crazy correction.
Yeah, so here's what happens. Okay, so the orange dot is Bitcoin overlaid on my Bitcoin dominance chart. So right here, everything's flat, right? Bitcoin dominance not doing much, Bitcoin itself not doing much. But then when the floodgates open, Bitcoin crashes, but alts are dying worse. When Bitcoin starts crashing, the alts are crashing harder, which causes Bitcoin dominance to go up. But right about here, we see this line right there. What the heck is going on there? That is suddenly, as Bitcoin is dropping, altcoins start showing more strength. So Bitcoin is dying while Bitcoin dominance is dying as well, which means altcoins right here are getting stronger. This could be a sign that right here, altcoins charge back up and get up above this previous high while Bitcoin is still crashing.
I would call
This
this an
is
inversion.
a bit of a telltale sign that we might be seeing Bitcoin grind up and altcoins go absolutely flying. And I feel like we had a similar situation, but I just can't remember when it was. This is it right here. Look at that. This is it. So see how the Bitcoin dominance, no, Bitcoin doesn't do much. Bitcoin is flatlining from June of 2023 to September, August, October of 2023. Bitcoin's not doing much at all. Altcoins have a huge alt season there, okay? That's interesting. That's what an alt season looks like. Anyways, that's it.
I want you
I
to
think
real quick pull up others, just others by itself. Can you hear
you
me?
mean hide this? Yeah, you mean hide this?
Yeah, not others.d, just others. All right, and draw a trend line on the weekly or the daily, either or.
What are we looking for? The uptrend, the downtrend?
There's a
Here's
trend.
here's what I'm seeing.
The other way. So it was I have it gonna break right now a trend line of the where what it would be the flag of where it's going down now. Kind of hard to describe.
You mean this?
Yeah, yeah.
Yeah. My problem with trend lines is that everybody's drawing them a little differently. So I tend to draw 2 or 3 trend lines just to see what the overall vibe is. But you are right. We're getting just massive amounts of liquidity building up. And this is a setup for a scary drop below one of these lows to get more liquidity. And then, because this is the topping pattern, like head and shoulders or some sort of pattern here. Like when you see this, a full retrace, retail traders are expecting it to move to the downside.
Draw a fib.
So then what happens is they all get short here and then they get wiped out when it goes flying back up.
Yeah. Draw a fib.
So that's what I would say.
Pump.
The whole thing. Okay, hold on. Let me draw this really quick. Here's what I think. It fakes out above into this fair value gap. Then it crashes below this. Gets some liquidity just below that level. And then gets back up into this liquidity. That might be what we see.
Draw a fib from that pump.
This whole thing.
Yeah.
It's probably all, if it's, nothing is held. The 786 did not hold. The 618 did not hold. Like it bounced off the 618 once with this wick. And then after that, it's just sliced right through it. Look at that. Nothing is like the 786 is worthless. In fact, the 786 is now resistance and the 618 has been resistance. That's not good. It's gonna retrace to this low.
Yeah.
Or I should say, it wants to.
Yeah.
Everything we're seeing tells us that it wants to retrace the whole move to this low.
It's chasing that liquidity down there.
Yeah. Until you, I don't, like I said, I don't trade market structure alone, but I learned ICT market structure for this purpose, to keep me away from counter trend bad trades. So when you see this, you go, okay, market structure has broken bearish. It has, what are we on, the daily chart? Market structure has stayed bearish here. This is all bearish market structure. Lower lows, lower highs. We expect from here, what you've got is this range right here. That's the, what are we, week, daily chart? So this is your range 1D. It's gotten back up to equilibrium. Technically, it could drop from here. So this is what you're expecting it to get to, at least. And then when it does that, it goes down to somewhere down here, maybe. Okay. Until you get, so here's the basics of ICT. We've gone over this before, but until you get a strong close above one of these highs, you do not get giga bullish to the moon. Okay. Sorry, that's just.
Yeah, you're looking for a market structure shift.
Yeah, that's a market structure shift. And from what we're seeing of these fibs, like it's the golden pocket is resistance. You're below the golden pocket. That's not good. And then now the 786 is resistance. That is not good. It could go rocketing up through here, but you don't get it. You don't get to trade, or at least if you're entering trades down here, do not get emotionally attached to them. Do not expect them to get higher. You got this fair value gap. You've got this high to get through. If you're getting into longs down here, we're looking at others right now. So if you're longing any altcoins down here, you better be taking profits in here, taking profits at this level, and then holding a small runner to go any higher. You are not expecting to the moon until you get a strong close above this level. So if you get stopped out, don't get emotionally attached to it. Walk away. That's all I got for the public stream. You want to do the private members only special requests technical analysis?
Let's take it over to the members only section. I highly recommend anybody that is watching us on anything public, come try us out for a month. You go to www.cartoonmoneyprinters.com, click the Start Now button, sign up through a Whoop portal, and then with that you can come to the after show and then get some questions in with Astronaut Toad. So
yeah, I want to say again, this whole month of February, if you had a free trial, you would have gotten the free, perfectly called analysis of our Bitcoin forecast that was spot on. We called this, it was bounce and then crash to this level, and that's what we got. So come check us out. I think March is going to be interesting. We will find some trades, so come check us out.
All right, thanks for joining us, everybody. We'll talk to you